President Ramaphosa has 1 year left to raise a further 500 billion rand for the South African economy. Today is the 4th annual investment conference, and when he started them, Ramaphosa set a target to raise 1.2 trillion rand for the economy in 5 years. But pledges are not the same as action, and the business community has expressed it wants to see real change in trading conditions instead of just big figures. eNCA's Devan Murugan is at the conference in Sandton. Devan, did the president in his opening address speak to what business wants to hear?
Yeah, I mean, I think he did exactly that. He went straight into it. Good morning, Tafuna. He went straight into that. I mean, look, he highlighted as his address began that he's fully aware, and he's not downplaying, he says, the fact that the country has electricity security issues, the fact that port infrastructure, rail infrastructure for many of these miners and businesses to get their products imported and exported is not functioning as it should. But he says, he pinpointed a few examples as to how that structural reform is unfolding. Spectrum auctioning that we've just seen last week successfully unfold. He pointed to that. He pointed to the moves being taken in the energy renewable sector, with the license requirement being lifted for the generation of 100 megawatts electricity. He spoke about the private partnership in the ports, for example. But, you know, as you say, I mean, this conference is one thing. He wants to move that target, that investment target, from 774 billion to 1.2 billion. And that's all well and good. Investors here will be doing the pledging. You are likely to hear a lot of numbers. But I think what's important is whether or not this is widespread to give jobs to the 12 million jobless people in the country. But here's the president on why he thinks Africa or South Africa is bankable. This is what he said earlier.
As we continue along this path of reconstruction and recovery, I call on all investors, entrepreneurs and business people to be part of this journey, for we have embarked on a journey of reform, a journey of recovery, and a journey of rebuilding this country brick by brick, street by street, and infrastructure project by infrastructure project. As investors, you need to know that your investments are secure, and that the operating environment in South Africa is stable, and that you are supported by policy certainty.
Well, Devan, like you said, millions of South Africans hear the big numbers that are pledged, but they want to see those pledges turning into tangible economic opportunities on the ground. They want jobs. How significant is this conference for the creation of jobs? And maybe we can look back and see whether the pledges from before have translated into jobs on the ground.
Look, I think government and certainly the head of infrastructure investment in the presidency, Dr. Cyril Ramaphosa, ceded to the fact that the infrastructure emergence and outlay of the projects has not been as fast as one would imagine. And look, COVID was one example or one factor that was put in place for it being slow. But he also did admit that the fact that the state has competency skills issues. It's no secret of that. I mean, if you have to build a school, you've got to get rezoning rights. And the municipal authorities, for example, will take ages to give you those zoning rights. And you can see why projects are delayed. Now, let me give you an important number here. The fixed capital to GDP ratio of South Africa is sitting at 14%, right? That's relatively low. What it should be sitting at is somewhere between 25 and 30%. What does that tell you? That the rate of investment in this country is not what it should be in terms of what is desired from business. And to answer your question about jobs, if we do not get that rate of investment at 25 to 30%, you're not going to get this economy turning fast enough to create the jobs for those 12 million people that are out of work. So indeed, you're going to hear pledges, but you need a certain certain degree of infrastructure, of an ease of doing business in the country to allow some of these projects to go on at their full potential. But more than that, beyond the conference, beyond the investors here, you'll have to see a wave of investment that goes beyond this conference, and that only comes from a faster pace of reform, which you've heard the President say is going to unfold. But I'm afraid many businesses and investors will tell you that pace is just too slow to meet the desired approach.
All right, Devan, is it possible to predict what kind of level of pledges we might see at this year's conference?
I mean, no one can really tell what the actual number would be, but just given the past conferences, they step up a couple of billions, and you probably are going to hear big pledges from pharmaceutical companies, for example. Anglo-American had just spoken in a panel discussion, their CEO, outgoing CEO, Mark Utifani, saying indeed they are here to invest. Technology investments, South Africa takes up some of the biggest of its technology investments. So you are likely to see these numbers boost up by millions, if not tens of billions rather. Is that the point or not, or is the point really whether or not these projects and beyond them unfold at a pace that will absorb labor? I think that's the key issue.
Is there any market or industry in particular which would find South Africa attractive at this point?
I'm not quite sure I got your entire question, but you were saying what works for South Africa in terms of its attractiveness and competitiveness. Well, there's been some short-term gains, as I said. There's been some move with renewable energy and the license requirement for the 100 megawatt for firms to produce their own energy and sell it. That's been a big policy shift. We saw the sale of spectrum, radio spectrum, happening last week, 14 billion rand. So again, it allows internet accessibility to expand. That's an attractive feature for investors. Then, of course, the government promising not so long ago that it will take the private sector and partner with some of the state-run enterprises, particularly Transnet and the rail networks, to try and find how to fix up an area, by the way, that is admittedly in crisis. People and businesses are trying their best to move their goods around, but that's not really working out with the desperate crisis happening at Transnet. So there's a private sector involvement there. So there we go, some low-hanging fruit that the President did sell to investors, but of course it's got to be sustained over the long term, the biggest one being energy supply and what's happening with Eskom. That's going to have to be much more convincing than it is at present.